Hey, it's Thursday, 6:30 a.m. Want to look at the markets. We've had an incredible run here with the markets going up over the past 11 days. Um, just looking to see what we got moving in the aftermarket or pre-market right now. Microsoft is up 1.5%. So let's look at Microsoft real quick. So it's up 417.50. So it's up here in the clouds somewhere. And speaking of the clouds, I want to look at SPY and the Qs. And you can see that this move, this artificial move, is just not. I mean, that's a great move for making money. Don't get me wrong. But it's an artificial move. Now you could say, well, wouldn't this be classified as an artificial move? I'd say yes, but look how many times it has taken a break on its way up and stair stepped. Where this move was only about 11 days and we're already back at new highs. All I'm saying is we need to be very careful and think about where it is, where's price at right now, where did it come from, okay? Because I do not believe this is sustainable. But also keep in mind we're not that far from the 50 and we're not that far from the 200. So I would say almost in a best case scenario, we come back and we do some price discovery and maybe we come back into this 650, 660 area and start retesting this 200-day moving average. I'm going to go out on a limb and say the same thing. I really want to see this 605 area retested, but I wouldn't mind seeing the 595, 590 area getting retested now to give us our high so we can figure out where our high is going to be. And I believe, honestly, that this is going to be our high for the Qs. And going back to the SPY, I think this is going to be our high. And we may perhaps just bounce in between these areas for now. This is a pretty big range, 630 to, let's call it 700. That's a 70-point range for price to just bounce back and forth in between of, if you think about it. I haven't looked at Apple, but I have been saying for a while that Apple, for a good 2 or 3 weeks probably, that Apple is one to keep an eye on. It's getting back above the 50-day moving average. This thing looks pretty good. It does have some overhead issues to get through. I want to look at NVIDIA, see what NVIDIA looks like. And NVIDIA is actually getting into the clouds too, going way back. It's not at the highs, even though the market's at the highs. This one's kind of lagging. Now this very well could break out of this area here. I had in my videos, I was saying if it gets above 200, I really like it to challenge the new highs. It's at 198.02 right now in the pre-market. Just all this chippity chop going back and forth here. You can see this big range that it was trapped in. It looks like it's trying to poke its head through, but if it gets rejected, it could come back here and retest this 200-day moving average. And that's kind of where I am, if you think about it. I do want to see where financials are. And more specifically, JP Morgan. Because I have been hearing agencies touting about the financials, how the financials were so strong. But remember, with earnings, it doesn't... I say this with a grain of salt. It doesn't matter what the companies report. It matters on how the markets react to what is reported. A company can come out with terrible earnings, or at least you would think they're terrible earnings, and the market goes up, and then everybody's scrambling to try to find a bullish narrative to piece it together and say, oh, the earnings weren't that great, but and this is why the stock is going up, or oh, the earnings were magnificent, and this is why the stock is going down. This is why the market's reacting negatively. So remember, everyone's always trying to put a narrative around something. Even with this whole strait in Iran, market's going up, everybody's bullish, right? And then as soon as the market starts rolling over, which I think that's going to start happening today, and it's going to bleed into tomorrow, and I think it's going to bleed into next week, we'll probably be talking more about Iran again and reasons why the market's going down. But long story short, there's always a narrative of the good and bad. It just depends on what side you're standing on and what narrative you want to be communicated. So I'm just saying what's down, what's up and what's down right now, and really there's not a whole lot moving. Microsoft is up 1.5%, but nothing really crazy right now. And I definitely feel like we're going to get this rollover. ASML Holdings reported earnings, and I think they weren't. I think they were good earnings, but I think it just has a really bad reaction, and that's kind of what I'm saying here. You can see it's breaking lower. It closed at 1481. So this is a heavyweight, right? It's a $1,481 stock. We're now sitting at 1459. So this is an important one to watch. TSM, they reported good earnings, if I'm not mistaken, and you can see they're also breaking down here. So I think what's going to happen with the semiconductors, in my personal opinion, and we can go back and look at charts too, but in my personal opinion, I think it's what's going to happen is the markets want to see something, right? We've been hearing everything. We've been hearing all this money allocation with AI, but we're finally starting to hear, and I've been talking about this for months in the professional world of writing about AI, that AI might be able to do things quicker and faster, but it's also eating into productivity because of a lot of its inconsistency. Now, depending on what use case you have, there is a viable solution with AI that can be repeatable, that's not going to have hallucinations and things of that nature, but it's not a one size fits all, and I think that's going to be the problem that we see right now is very large allocations of spend, and that could or couldn't be circular, where companies are just investing in each other back and forth and inflating their bottom line. But I think it's going to get to the point here this earnings season of show me, right? You've been telling me, now show me. And I really think the market needs to see where these return on investments are. It might be helping you do things quicker and faster, but is it producing a return on investment? And what does that return on investment look like? If you allocated $135 billion, like what's your rate of return or your rate on equity? What do the numbers look like? And I hope we finally get there this quarter. And I believe if we do, however, it won't be as satisfying of breaking out to even higher highs. Now, I could be wrong, But I think there's going to be a little bit of a rebuke against artificial intelligence. I think it's going to get to the point where it has sold to companies and corporations, and it's trying to appease to the people. But I think a lot of the issues that are starting to pop up may begin to overwhelm that narrative to where a company renaming themselves and putting company ABC and now company ABC AI isn't so catchy anymore. And I think we kind of seen that years ago with all the SPACs. I remember if you came out with a SPAC and you said you were doing business with another SPAC and you had a letter of intent, right? Your LOI, and you said you were going to do business with this other SPAC, who, by the way, neither SPAC had revenue. They just had a market cap. And you said you were going to do $5 million in business with this other SPAC. It was just SPAC Palooza. I mean, all the SPACs would go skyrocketing. And we all knew, right, that these SPACs are no more than shell companies, but ride the waves. If the trend is taking you higher, then take the trend higher. You know, the motto is just don't be the last one buying. So take your profits on the way up and try to secure yourself on the way down. So and I'm wondering if we're going to get that same dilemma here, because it feels like there's an intense amount of FOMO. And honestly, I think the markets are algorithmically sensitive even more now than ever to Trump's comments when it comes to Iran. Now, sooner or later, either the market is going to sniff it out and say, you know, just by saying that there's positive talks, the market's not just going to keep going up. It's going to be more of a show me, I think, market moving forward. We hear a lot of rhetoric, whether it be political, whether it be from CEOs about earnings and things of that nature. I think this is the show me market. And if the market can't do that, then we'll be retesting the 50 and the 200-day moving average. And if the market can produce that, then we could potentially have our multi-month breakout. So there's no tools to show to say, hey, if you follow this tool, this is what's going to happen. Or if you do this or do that, you know. So all we're doing is speculating on what we believe, but what we're doing is we're looking at charts and we're making decisions based on charts. And the only thing that matters in our thesis is the charts. So this is your real-time forward indicator. So if we just focus on what the market is telling us and get rid of all the noise, you know, outside the ears, and just focus on what's between the ears, it'll put you in a better spot, in a better position. All right, we'll see what the market does today. But like I said, I'm looking for price discovery. I'm looking for price to start breaking down. I'd really like to get back in this area and test it to make sure it's stable. Otherwise, I feel like this right here, I don't know what the volume looks like. I feel like this volume is a little dry for these moves here. And it's super overextended. I'd really like to see this come back and retest this area to find out if this is real or if it's fake. So that's my thesis on the broader markets. All right, have a good trading day. Take care.